PepsiCo, the Cola Wars, they named some new field generals. Mike Esterl's down in Atlanta. Give us the details on this one.
Thanks. Cheers.
Thanks to you too, Michael. How you doing? Hey.
The management looks a little bit different today. PepsiCo announced this morning that they're bringing in Brian Cornell, who used to head Sam's Club over at Walmart. He left in January. He's running a $40 billion operation. He's very well regarded in financial circles. And they're moving John Compton into the position of president. Compton's been around for a very long time. He headed food services. And now he will be responsible for trying to pull all the disparate parts of PepsiCo together, both in terms of food and drink brands and then countries. It's been a very decentralized company for many years. They're trying to fix that for a bunch of reasons. One of them is the stock is flat over the past 5.5 years since Indra Nooyi took over as CEO.
Right, Mike, how much should we read into these moves? I mean, obviously company executives come and go all the time, but you were just talking about the stock price. How much should we read into? How much of this is a commentary on current leadership?
Well, there is a lot of pressure on Indra Nooyi and on top management, and investors have made that very clear. Quite a few of them were calling for the company to be split up just a few months ago, and PepsiCo did a months-long review of their business strategy and came out in February and said we're going to stay as one company. But now they got to show that they can deliver the results. They also came out with a profit warning in February. Their profit will be smaller this year than it was last year. And that's in sharp contrast with Coke, which seems to be running on all cylinders now. Strong share gains, strong market share gains when it comes to beverages, and everybody loves Coke. So the contrast is quite striking. A lot of the attention is on Indra Nooyi, and so I think there's probably been a fair bit of pressure to make sure that she strengthens her bench. At some point, she's been there for more than 5 years. She probably will be leaving the company, and they want to sort of assure investors that they've got some people who could replace her.
Mike just referred to everyone loving Coke, and certainly investors love Coke, at least compared to Pepsi over the past 5 years. And Mike had mentioned that the stock price was flat for Pepsi over the past 5 years. For Coke, it's been up
right. You can see we
50%.
just pulled up both of those charts you see are both 5-year charts.
Right.
It's about 50%, I think. Coke
yeah,
is
exactly.
up roughly over that period.
So Mike, the question I have for you is, do you expect that Pepsi, in order to gain market share, to get back in the favor of customers who may have gone to Coke or prefer Coke, will engage in a price war?
That's one of the concerns among investors. Until now, PepsiCo hasn't done that. PepsiCo was actually complaining that Coke might not have been pricing aggressively enough last year. And so both Coke and Pepsi put together some pretty large price increases late last year. There's a little bit of sign of slippage. The problem has been, especially when it comes to soda in the U.S., fewer people are drinking soda every year. And so they've been dealing with that by raising prices, but that kind of exacerbates the demand issue. So what we've been seeing over the last several months is price increases and kind of a commensurate drop in volume. And there were some signs in January and February that PepsiCo was maybe not pricing as strong as it was just a few months ago.
Yeah, Mike, and look, obviously I'm not a shareholder of either company, so I'm an outsider, but the Cola Wars have always seemed kind of more wasteful than they need to be. I mean, Pepsi and Coke, these are gigantic companies that have grown over decades. They've pretty well saturated the market. How much more can these companies reasonably be expected to grow? Shouldn't shareholders just be happy with the fact that they have a steady dividend?
Both companies have been generating steady dividends, and PepsiCo has been very profitable for many years. So you're absolutely right. The growth is in non-soda. It's in branching out into other beverage types in the U.S. and then the whole world. Actually, soda consumption outside the U.S. and outside Mexico is not nearly as saturated as here. So there's a view out there that there's 200 countries out there. And penetration isn't nearly what it is in the U.S. So that's kind of the growth model. And Coke believes, too, the demographics are on their side in the U.S. You've got another 30 million people, I believe, under the age of 18 coming into the population over the next several years. And so they kind of cast the United States as almost being, at least among developed economies, a bit of an emerging market.